Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about TIANGONG INT'L interim report. Tiangong International Company Limited offers a diverse range of businesses and services, including manufacturing and selling alloy steel, cutting tools, titanium alloys, and related products, trading of goods and special steel investment management, and advisory services, processing and selling electric tool sets, manufacturing and selling die steel and high-speed steel assembling, and selling power tools kits. These products cater to various industries such as aviation, automotive, aerospace, marine engineering, electronics, and more. The significant increase in Tiangong International's stock price over the past year can be attributed to several key factors. Firstly, the company's share buyback program has signaled confidence from its management and reduced outstanding shares, potentially increasing earnings per share. Additionally, strong performance in high-growth segments such as titanium alloys has driven demand and revenue growth. The company's commitment to innovation and R&D has also instilled investor confidence in future growth. Furthermore, despite mixed financial results, Tiangong International has maintained a stable net profit margin and achieved positive profitability trends. The declaration of dividends reflects the company's focus on delivering shareholder value, while insider ownership suggests a vested interest in the company's growth. Overall, these factors have contributed to the 45.61% increase in Tiangong International's stock price over the past year, indicating a strong performance from the company and potential for continued growth. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the increase in average selling price across various segments, particularly in the high-speed steel (HSS) segment, with a 14.1% increase in domestic revenue. The cutting tools and titanium alloy segments also experienced growth, albeit at a slower pace. On the other hand, revenue decline can be attributed to several factors, including intensified competition and uncertainty of tariffs affecting North American markets, leading to an 8.2% decline in export revenue. Additionally, decreased sales volume due to U.S. tariffs policy resulted in a minus 35.4% decrease in export revenue. The cutting tools and titanium alloy segments also experienced declines, primarily due to low added value of titanium plate and tube processing. Overall, the broader China-U.S. conflict and trade tension have had a significant impact on volumes and margins along affected value chains, contributing to an overall revenue decline of minus 7.1%. Net income and profit margins of the company experienced a positive change between 1H 2024 and 1H 2025. Net income rose by 4% from RMB 210,239,000 to RMB 118,619,000, while net profit attributable to equity shareholders increased by 10.4%. Profit margins also improved, increasing from 8.3% in 1H 2024 to 9.3% in 1H 2025. This indicates a significant growth in the company's financial performance over the given period. The company is generating a significant amount of positive operating cash flow, with an operating cash inflow of RMB 1,282,028 and net cash generated from operating activities totaling RMB 22,340 in 2025. It is clear that the company's operations are producing substantial cash. This trend is consistent with no contradictory information provided elsewhere in the financial summary, indicating a strong financial position for the company. The company's financial summary reveals a mixed performance across various segments and regions. On the positive side, high-end equipment manufacturing and robotics industries showed strong results, with notable growth in China's humanoid robots market. The cutting segment also performed well, with significant revenue and profit increases. In contrast, the titanium alloy segment struggled, with no explicit mention of profits. The others segment also underperformed, with minimal profits reported. Regionally, North America and Europe experienced declines in revenue, with decreases of 44.2% and 11.8%, respectively. However, Asia, excluding China and the PRC, showed growth, with revenue increases of RMB 75,994 and RMB 3066, respectively. Management is optimistic about the company's outlook, citing China's resilient economy driven by domestic consumption. To enhance competitiveness, they plan to establish a joint investment task force with Hendrida New Materials, focusing on advanced manufacturing and cutting-edge technology. The company also prioritizes green production, having made advancements in smelting processes and recycling technology. Additionally, management has ruled out any material investments or capital asset purchases for the remainder of 2025. The company has demonstrated its commitment to returning value to shareholders through two key initiatives. Firstly, it has paid dividends, with RMB 71,395 declared for 2025, and an additional RMB 109,073 approved, but not yet paid out in 2024. Secondly, the company has also engaged in share buybacks, repurchasing a significant number of shares in 2024 at a total cost of RMB 75,189,000. That concludes the financial summary for TIANGONG INT'L. Feel free to comment below, and I will be happy to answer them when possible.